Hello and welcome to our weekly look ahead at the markets here. First up, a little recap of the last week, which we can sum up in one word, and that was inflation. And lots of fears about inflation were stalking the markets. We came into Monday's session off the back of the non-farm payrolls report and the prior week, which showed a big miss on headline hirings, but wages grew strongly. A bit of an inflation worry there perhaps. And then Monday we saw the Chinese producer price inflation numbers come out. They were a big beat. They were aggressively higher, above 6%. Similarly, US PMI inflation taking a 6 handle as well. But really it was Wednesday's CPI number that was the big one, came in at 4.2%, and the month-on-month core reading at 0.9% was the highest since 1982. That headline number at 4.2% was the highest year-on-year figure since September 2008. So inflation fears have stalked the markets, and we've seen some selling at the start of the week in the US, Monday through to Wednesday. We're down days, a bit of a recovery on Thursday and Friday. So really looking ahead to the coming week, the inflation story is going to continue to play out. And most notably, I think on Wednesday's FOMC minutes, the Fed has been very, very clear that it's prepared to look through what it thinks is going to be a transitory inflation bout and keep monetary policy as accommodative as it currently is for some time. Governor Waller is saying that it will take several months more data before they start to think about taking the foot off the pedal. So the minutes from the FOMC will just provide a bit more detail and clarity around what some of the members are thinking. We know what the main, the chief sort of players in it think: Clarida, Brainard, and Powell. But it'll be interesting to see if there's any sort of divergence, any kind of arguments taking place among policymakers about just how transitory this inflation will be. Elsewhere, we've got UK inflation numbers, so keep your eyes on those ones for the pound. Any sort of aggressive push higher in UK inflation could get people chattering about the prospect of the Bank of England tightening rates a bit sooner. The latest Bank of England report made it clear that whilst it thinks growth is coming back strongly this year, it doesn't think inflation is really going to run away, and that actually has pushed back some expectations for the bank to raise interest rates until next year, which could be brought forward if inflation does start to come through, and that could be positive for the pound, of course. So again, it's very much the story of the moment is inflation. We'll be keeping our eyes on any data around that. And as I say, it's FOMC minutes will be the major event, as well as UK CPI numbers. And then at the end of the week, it's the flash PMIs. It's a deluge of PMI data coming through in the morning for the Europe and UK US. So keep your eyes on those ones, expecting to show strong resilience and bounce back in economic activity. But of course, we should note it's survey data, and it is a diffusion index, so people are only really commenting on whether they think things are better this month than they were in the previous month, and so it's open to some fluky sort of numbers on that one. So lots to look out for. We'll be here as ever, staying with you on X-Ray.